All right, let's dive right into one of the most crucial processes in all of business, the accounting cycle. We're going to go on a little journey here, from total financial chaos to crystal clarity. And believe it or not, it all starts with a pretty simple question. No, really, think about that for a second. Are the numbers you're looking at, whether it's for your business or your investments, giving you the real story? Because without a solid system in place, the answer might be, well, a little unsettling.
You see, when there's no system, this is what happens. It's just a mess. You end up with income figures that are wrong, expenses that just don't add up, and financial statements you just can't trust. It's basically a state of financial chaos, and you can't make good decisions with bad data.
But hey, there is a solution. There's this really elegant, really powerful system that's designed to bring order to all that chaos. I want you to think of it like a giant financial reset button that makes sure every single dollar is tracked, classified, and reported correctly every single time.
And that system, it's called the accounting cycle. At its heart, it's a complete step-by-step process. This isn't a one-time thing, you know? It's a structured, repeatable framework that really forms the backbone of any trustworthy financial report.
And that idea of a full financial reset is honestly the perfect way to think about it. At the end of each period, could be a month, a quarter, a year, the cycle finishes up and you get to start the next one with a totally clean, totally accurate slate.
So how does this whole reset thing actually work? Well, it's an 8-step journey that takes us from one single tiny transaction all the way to the big picture of a company's financial health. Let's walk through it together.
So here it is, the whole cycle in one picture. You can see it's a continuous loop of 8 steps, right? It kicks off with identifying transactions, moves through all the recording and checking, and then wraps up by getting everything ready for the next period to start all over again. Let's break them down one by one.
It all starts right here. Step 1 is simply recognizing that some kind of financial event happened. A customer bought something, you paid a bill, you bought some inventory, you took out a loan. Every single one of those events has to be identified and documented. No exceptions.
Next up, we have to record every one of those transactions in a journal. Just think of it like the company's financial diary. It's a day-by-day log of every single thing that happens, and it's all captured using the fundamental language of accounting, debits and credits.
Okay, so once all the entries are in our financial diary, step 3 is all about organizing them. We transfer or post those entries into what's called a general ledger. This just groups all the transactions by account. So all the cash stuff goes in the cash account, all the sales go in the revenue account, and so on. See, we're getting organized.
And that brings us to our first major checkpoint. After all that initial recording and sorting, we have to stop and make sure our math is actually right. This is where we put together what's called the unadjusted trial balance.
The goal here is super simple, but it is absolutely non-negotiable. We add up all the debit balances from all the accounts, and we add up all the credit balances. Those two totals have to be equal. If they're not, it's a red flag that we made a mistake somewhere in the first 3 steps, and we've got to go back and find it.
Now, assuming everything balances out, phew, we can move to step 5, making adjusting entries. These are for the tricky things that don't happen in a single clean transaction. We're talking about things like the value of equipment going down over time. That's depreciation. Or, say, the electricity bill for a month you've already used but haven't paid yet. These little adjustments are crucial for getting a truly accurate picture.
After we make those important adjustments, guess what? Yep, we gotta check our work again. This brings us to our second and final checkpoint, the adjusted trial balance. It's the exact same process as before, but now it includes all those important little tweaks.
We run that same check one more time. We sum up the debits, sum up the credits, and once they are perfectly equal, now we know the data is accurate, it's balanced, and it is ready for the main event.
And this, right here, is the prize. All that meticulous work, all the recording, the posting, the balancing, it was all leading to this exact moment, the ability to finally reveal the true financial story of the company.
Step 7 is where we transform all that perfectly organized data into something that's actually meaningful. We prepare the financial statements. This is the point where all those raw numbers become a narrative, a story about the company's performance, its position, and its overall health.
And from that one adjusted trial balance, we create these 4 key reports. The income statement tells you if you made a profit. The balance sheet gives you a snapshot of what you own and what you owe. The retained earnings statement shows the profits you've put back into the business, and the cash flow statement tracks all the money moving in and out. Together, they tell the whole story. Finally, we get to hit that reset button for real with our closing entries. We take all the temporary accounts, like revenue and expenses, which only track one period, and we reset their balances to 0. This is literally wiping the slate clean, so we're ready for a brand new accounting period.
So, after walking through all 8 of those steps, let's just zoom out for a second and ask the big question. Why does this cycle actually matter? Well, it's because it's the thing that turns a jumble of numbers into reliable information you can use to make smart decisions.
I mean, the benefits are just so clear. The accounting cycle keeps your financial information perfectly organized. It makes sure that the reports you're relying on are accurate and totally trustworthy. And super importantly, it means your business is always audit-ready. It's really the foundation of financial integrity.
And this is the key thing I want you to take away from this. Whether you're a business owner, a student, or an investor, understanding this process isn't just about bookkeeping. Mastering this cycle gives you a seriously strong foundation for understanding pretty much every other area of finance and accounting.